How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing. Always protect your profits. And today we're going to be talking about GGPI. And you can tell from my expression, this stock has pulled back quite a bit due to the sell-off we are seeing inside of the market, closing at $10.55 and testing $10.46 on the low. Man, it feels like Christmas. But I won't waste any more time. Let's jump into the agenda. If you're new to this channel, I just want to let you know we have timestamps down below inside the description. But if you're a shareholder, you're thinking about taking a position, I highly suggest you watch this full entire video. So the first thing we're going to go over is the technical analysis. We're going to be taking a look at the overall price action. We want to know support. We want to know resistance. We want to know what it looks like in the bearish case scenario and as well as in the bullish case scenario. And then we're going to be going on Fintel, taking a look at the recent institutional ownership and short interest information. The reason why this is important because it does have an impact on the way the stock performs. And then we're going to take a look at the order flow distribution. We want to know the buying and the selling behavior on the retail side and as well as on the institutional side. And then when all of that is done, we'll be going into the final thoughts and as well as some more details. So let's get to it. So we're going to do a technical analysis for GGPI. Let's see how it performed on Friday. So it ended up closing at $10.55, being down 4.18%. On the low, it tested $10.46, and then on the high, testing $11.04. When we take a look at the volume stats on the day, you can see we traded at 6.391 million shares, and the average volume over 10 trading days is at 3 million. So we did have above average volume on the day, but you could tell we dealt with a good amount of selling pressure. When we take a look at our chart, which is the daily chart, we could see from the RSI down below, it's at 35.96. And then when we take a look at our moving averages here on the chart, we are below the 50-day, the 21-day EMA, and as well as the 100-day. So very clear that GGPI is in a bear market. But one of the things I want to bring to your attention, and I've said this many times before, since it is a SPAC, the floor price is at $10. So what I'm going to be looking for the coming week, can we pull back even more? The last time we tested these areas of support as far as for that 1046, you can see it was all the way back in November. That was the last time. So if we end up pulling back further, the next level I'd want to see if it would hold up at is around $10.35. So just 10 cents from off the low of the day on the Friday. And if that broke through, then we could start getting into the 1020s and we get even closer to where the floor price is. And this is why I'm saying this has to be actually one of the best plays in the market right now in regards to investment purposes, where you just put your money in and you just got to keep on top of the news. You don't have to worry too much about the price action. But aside from that, if you want to look forward to seeing a reversal or some sort of strength, of course we're going to have to come back to the $11 level. And then upon reaching 11, this is where I want to see the momentum pick up, where we can start getting back onto the 21-day EMA at $11.36. And this is where I see things could really start looking good for this stock when the market starts turning around and tech starts picking back up. So continue to keep a close eye on this play and do some more homework and due diligence if you have any interest in it whatsoever. So now let's move on to the short interest information. So we're going to take a look at the recent institutional ownership and short interest information for GGPI. As we scroll down further on the page, green rows indicate new positions while red rows indicate closed positions. So as we take a look here, we're going to take a look for the 21st. We have Secanti Capital Management Limited that ended up closing out their positions. And then what I think we already covered already, we had Goldman Sachs that went in with a position. They also have a close and they also had calls of a value of 52,300 shares. Now, when we take a look at the short interest, the dark pool short volume ratio is at 32.76%, and then for the dark pool short volume, it is just over 1.2 million shares. Scrolling down further on the page, the short shares availability is at 450,000, updated 2 minutes ago, and then for the short borrow fee rate, it is at 1.90%. When we take a look at the history of the short volume, we can see for the close of the 20th, it was at 40.07, and then for the close of the 21st, it was at 32.07. 0.76. So what does this tell us? GGPI does have short squeeze potential. So this is why you want to keep a very close eye on this play, and I still see it as one of the most safest plays out there in the market. So now let's go on to the order flow distribution.
Now let's take a look at the order flow distribution for GGPI. So we see on the inflow, it was at 10.93, and then on the outflow, it's at 15.22. Taking a look at the breakdown further, on the large, it was 0.21. On the medium, it was 8.34, and then on the small, it was 2.38. Taking a look at the outflow side, we can see on the large, it was 0. On the medium, it was 11.11, and then on the small, it was 4.11. Keep in mind, these numbers are in the millions. Taking a look at the large scale orders in the last 5 days, you can see for January 21st, which just passed, which is a Friday, it was at 213.6. And we also did have an inflow on January the 14th at 226. So we could see we had 0 for the 20th, the 19th, and as well as the 18th. But for the most part, we see institutions, funds, whales have been loading up. When we take a look at the small scale orders that tend to represent the retail side, we had more selling than we had buying. No surprise due to the market conditions. Then when we take a look at what happened on the medium, we had more selling than we had buying. And then when we take a look at the large, of course, we had more buying than we had selling, again, representing whales, institutions, and funds. And then when we take a look at the turnover ratio, it was high, 6.39%. We're not used to seeing this for GGPI, but due to the selling pressure that we had on the Friday, there's no surprises there. But it did provide a big time buying opportunity. I'll talk about this further inside of the final thoughts. Let's get into it right now. So for my final thoughts for GGPI, this dip is a big time opportunity. I know I've talked about this in previous videos, so let me explain this again. It is a SPAC. The floor price is at $10. At any moment in time before the business combination, you could just call up your broker and say, well, you know what? I want to sell these shares for $10. I want my money. And it's that simple. So knowing that the stock is at $10.55 when it closed, what are you risking? 55 cents a share. And this is not even taking into consideration what the upside is. In regards to the upside, I'm looking for at least, because you know I'm being conservative, is around $13. But there's a high likelihood it can go even further than that. So this is why I'm saying this is actually one of the safest and easiest plays inside of the market. So here's an example. If this stock decides to pull back even more, let's say if it goes to $9.50. Just call your broker and be like, hey, I want to sell this and I want it for $10 a share, and you will receive it. And this is why I want you guys to understand, when you see plays like this, look at the risk to reward ratio, and it's looking really good. I see a lot more upside when the market does turn around, but we could end up seeing some more downside since we do have the Fed meeting for this week. We know they're going to be talking about rate hikes and so forth, and tech could continue to sell off. And this is why I was saying we did test $10.46 on the low. So there is a possibility if we pull back even more, we can get down to around the 10.20 range, so $10.20 or even 30 cents or even further below that. You guys know this is why you have to use a dollar cost averaging approach. I told you guys, I like to actually add a little bit to my position when it falls under 11. Now that it's well below under 11, I'm going to continue to add a little bit more. If this stock gets closer to 10, I'm going to add even more. And if it gets even to the $9 area, I will add a little bit more, not too much whatsoever, and just see how this play actually turns out. And I want to make sure that you guys have a similar strategy if you're interested in this play. I'm not telling you to buy the stock. I can't give you guys financial advice, but I just want to make sure that you're using the right position size and you're not going all in when you take a position. It's one of the worst things that you could do, because if the stock dips, you won't be able to take advantage of it. Also, when we went on Fintel, taking a look at the short interest information, it does continue to have short squeeze potential. So this is another reason why, with all of these tech stocks pulling back, the moment we have more buying coming in to these plays, they're going to end up moving up. So like I said, the risk to reward ratio looks really good. Do your homework. Do your due diligence. You know, as far as what I'm going to be doing, I'm going to be playing this thing up leading up to the merger date. As far as holding my position, I will not do that, because if you have noticed, anytime the business combination does happen, stocks pull back quite a bit. Yes, they do recover. I want to make sure I'm mentioning that, but I, for myself, I see this as a swing trade opportunity, and if it does sell off at a price point where, you know what, I'll be very interested, I will load the boat, because I do think, as far as for Polestar is concerned, it looks like they could be a solid competitor inside of the space, and I will take a small position in my portfolio to see where this company actually goes. Again, for an EV play, these these are one of the safest bets out there inside of the market. So I hope you guys enjoyed this video, and I can't wait to see how the stock performs for this coming week. We'll talk soon.